Hello, everyone. We are live. Okay, impromptu live. I know I usually like to announce it to the world, but this time I wanted to hop on impromptu. And this is going to be actually my first time going live in LinkedIn. So that's going to be an interesting experience. So if you are listening to me, sorry, of course the phone decides to ring when I am actually trying to go live. All right. So if you are listening to me, listening to the replay, if you're listening to the live, say hello. Tell me your name, where you're from. And if you are listening to the replay, put pound replay so that I know that you are listening and you were here. So today we are going to talk about the summer investing series. So first of all, for those of you who don't really know me that well, my name is Myrna Lane Hippolyte, and I am a financial wellness coach and wealth strategist. And I help powerhouse women executives turn their amazing income into their first $1 million in net worth, even if they're new to investing in the stock market or are not financial professionals. So I really am passionate about investing and investing in the stock market because I really believe that that is a way for us to build wealth. And right now, the stock market's a little bit hot. It's hot. Summer's hot. The stock market's hot. So it really behooves you to, if you are not in the market and not investing, to learn a little bit more about it. So that was the genesis of my summer investing series. Last time, a couple of weeks ago, we talked about the importance of looking at emerging sectors and emerging trends and what's happening, like with AI and where we could potentially look at investing. We looked at companies like AT&T and Verizon and what that meant in terms of what was happening with them. So now this week, I am going to talk a little bit about diversification and what that means and why it's important. So diversification is really just a fancy word for making sure that you don't put all your eggs in one basket. So if you got $10,000 out there, don't go put all of it in, Amazon if that's the only thing that you got. You might feel very passionate about Amazon, but diversification is all about not putting all your eggs in one basket and mixing it up and figuring out where you need to put your money. So that's diversification. So when we talk about diversification, it helps us manage risk. So in the case of Amazon that I talked about, when you're just investing in Amazon, let's say, God forbid, something happens and Amazon stock crashes, if that's all you're invested in, you're not really mitigating your risk. When the rates of return go high, then yes, that makes sense. But if it's low, then you don't necessarily make sense. Oh, hey, Davidson, nice to see you. I'm glad that you're listening from Palm Beach. All right, awesome. So diversification is very important. So one of the first things that you need to find out is, what is your level of risk tolerance? How much risk can you take? So part of that is understanding what your investor personality is like. So investing to me is kind of like food, right? You know how some people like spicy food, some people like pasta, some people like, you know, I don't know. They like seafood. So there are different foods. So people like different things. So investing is kind of the same way. You need to be able to figure out what works for you. So if you are that person that says, oh my gosh, the market is down 20%, my portfolio went down 20%, my stocks went down 20%, and you're about to go out there and literally feel bad and spend the day in the bed, then maybe you might not want to invest in something that's as risky because you don't have the stomach for it. But realize that you don't really lose any money in the stock market unless you actually sell something. But that's a whole different platform. Hey, Christine, thanks for joining. So when you are diversifying, one of the easiest ways to do that, and this is hot tip, one of the easiest ways to do that is through an exchange traded fund or a mutual fund that tracks the market indices. So what do I mean by that? There are specific funds that mimic what the actual market does. So if the market's going up, those funds will go up. If it's going down, they'll go down. So you don't have to go into a situation where you're actually picking stocks where you have to say, oh, well, do I pick Amazon? Do I pick Walmart? You don't have to do that. It's already done for you and you're in the game automatically. So some of those funds are that you want to look at, and I'm going to give you the tickers are, well, before I give you the tickers, I have to give you my little spiel about I am not an investment advisor. I am a wealth coach. I cannot give you investment advice, right? You have to do your research. You have to make your own decisions when it comes to investing. All right. Now that I've said my piece, let's move on. So when we're talking about three particular exchange traded funds or mutual funds that you want to look at, in these cases, it's exchange traded funds. The tickers are as follows. SPY, which mimics this S&P 500. You have VOO, and you also have QQQ. So those three, you get into any one of those three or combination, you should be mimicking the market. So some of them are priced at about $400 a share. If you can't afford $400 a share, put in what you can afford. As long as your brokerage firm where you can place orders accepts fractional shares, which means that you can order a portion. So if a share of VOO is trading at $400 and you only have $100, you can just go out and buy $100. But that's the most important tip, right? To make sure that you get in the game of the market. So investing in those particular funds, either one, a combination of, will help you find that diversification, making sure that you're not keeping all your eggs in one basket and you're actually participating in the overall market. So that's very important. So any questions on that while we're in the chat? All right. So that's number one. Number two is thinking long term. So yes, there are things that you can do out there. You can go out there and trade short term, trade for a week, trade for a couple days. You can actually go out there and do that. But you have to stay on top of it. You have to do your research. You have to understand trend. Who has time for that? Most of us are busy people. We do not have time to go try to trade on the short term unless you want to be a day trader or you want to do that as part of a hobby or do that as your side gig, whatever that may be. So if you don't have time for that, you need to think about long term. So when you are selecting your investments and the types of things that you are looking at, investments that you're looking at, you need to make sure that you're looking at these for a long-term horizon, things that you can keep for the long term that will grow, keep on growing, and have the possibility of growth, possibility of innovation. So that's step number two. So outside of not putting your items in your investment in just one basket, you want to be able to have a long-term perspective because fluctuations happen in the market, right? Today, the market might be doing well. We remember last year at about this time, the market wasn't doing so well. And, 401k portfolios were going down, But now, if you invested anything, unless it's really, really bad investment, if you invested anything starting January, the market's up and everything's kind of picking up some momentum. And bull markets, which are, up markets, tend to last a good little period. So take advantage of it. If you are not in the market, I would strongly suggest that you get involved and find a way to invest. And it doesn't have to be complicated. So diversification, fancy way of saying don't put all your eggs in one basket. Those three funds that I gave you, try to pick one or two. VOO and SPY are kind of similar in terms of what they're tracking. QQQ is a little bit different in terms of it tracking the NASDAQ. So pick one of those and put some money aside, and that will help you have a mixed basket because those track the market and they have a number of stocks in them that will help you build your wealth in a way that's not intimidated, in a way that doesn't mean that you have to go out there and pour over balance sheet statements and income statements. So go ahead and do that. And then think long term. Don't think just for tomorrow. Don't think for next week. Think long term, because the magic formula for success when it comes to investing is time, rate of return, and consistency. So you got to do it over time. You got to be consistent, which means do it every month. Don't just, put in some money and forget about it until next year. Put in some money on a regular basis, and you want to be having a good rate of return. So you want to have a good investment that gives you a high rate of return, 10% plus. And that, involves doing your research and being able to understand what investments are going to get you there. All right. Are there any questions? The other thing that you also need to think about when you are getting into an investment is being able to control your emotions. And that's why I tell my clients that they need to think long term, because right now the market's up, everybody's happy, and people who have invested, want to invest, or people who are already invested are happy because the portfolios are going up. But if portfolios are going down, you want to still keep a keen mind and keep focus on what your end objective is, which is long-term wealth building. All right. So diversification, not putting your eggs in one basket, long-term focus, and keeping that emotional control are three things that you want to think about when you're investing. And I did give you the tips in terms of where you can potentially practice that diversification. All right. Thank you so much, everybody, for joining tonight. I was on a number of platforms, so hopefully I was able to address everybody's questions or concerns. I will see you again week after next in my summer investing series. And I promise next time I'll pre-announce it so that everybody can get ready and everybody can hop on the live to take advantage of these summer investing tips. Oh, before I leave, how could I forget? One last thing, I also am doing right now a investing group coaching program, which is a group program where we learn about the basics of investing for 6 weeks. So you can come in if you're that person where all you've done is Uncle Joey gave you a stock tip and you just said, oh, let me put some money there, and you don't know anything about investing, this program is for you. Or if you're that person that doesn't know anything but says, Myrna, I got to take advantage of the stock market, come join us. It's a group coaching program. The specifics I did put in the chat in terms of the program and how you can sign up. If you have any questions, feel free to DM me. And I believe that's it. I hope you guys have a lovely evening, and I'll see you again week after next for our summer investing series. Good night, everybody.